got wiped out. So hope everyone is still in the game, but probably if you are here at the stream, that is the case. So good to see everyone, and just wanted to tell that don't feel FOMO, don't think you are too late. You need to go max leverage right now, because otherwise you miss the bottom. They will make you believe that, but it's not true. If this was the bottom, we are about to have like a year, 2, maybe 3 years of a bull run. So there is plenty of time, and there will be crazy setups along the way where we can profit from. Let's quickly look at the chat. Just stop loss on gold. Yeah, gonna look on gold. I'm not sure what happened. I went to the pancake restaurant, like pannenkoeken restaurant we say it in the Netherlands, with my niece. So I haven't looked at the charts besides the updates from this morning. We always have more time than we think, and there will always be more plays. I can't wait till 2028. No, it's probably not 2028, but I would not be surprised if we enter like a multi-year bull run. And then 2030, yeah, I think that's gonna be very wild times, but we will see. Mike, I did make the most of it because I was too focused on shorts, but I've learned a lot from it, and that's worth. Yeah, it's absolutely worth as well. And like, to be honest, everyone, if you read X now, it seems like everyone catch the move, but it's all fake. Like, I know people in that game, I know a lot of them. Believe me, most of it is fake. Almost everything is fake. It's literally, it's crazy. They will pick their posts where it seems like they were bullish and stuff, but is it crazy that we have been chopping like crazy 5 weeks, doing absolutely nothing, and nobody got wrecked there. Nobody was long, everyone was looking for shorts or continued ranging, and we get, to me, this is like, there was not really a clean setup or anything. Even here, if we swapped the low, that would have been a trigger for me to long it, but we unfortunately just made a higher low. But all of a sudden, everyone catch this very sudden pump, and they did not sold it here. No, they all longed it here, had their stop below this low, and they TP'd at the high. Yeah, obviously that's all fake. So don't make yourself go crazy for missing out. Most people got wrecked, got liquidated, and just a few had a position. But even such a position can be fake, because most of the influencers you see, they trade with like a $1 position, and then they can always in hindsight share, oh look, I entered there, this is my position. But they just have either demo accounts, or they have just accounts with a few cents, and they open all kinds of different positions, and then always in hindsight they can share the position. So it's all fake. But let's not dive into that too much. What I want to talk about is the price action right now, because we have crazy candles higher. And then the question is always, oh shit, what should I do? But as I also said yesterday, like, for a trader, you can think, oh, this is now vertical price action, but even very locally, price will always form a range. The only thing you should now be aware of is that you don't start looking only for shorts, because that's the trap. That you think, I'm too late, too long, so I'm only gonna look for shorts. But even on here in Bitcoin, yesterday you could draw a range. The only thing is, we are in an uptrend, so you have bullish ranges. So if you get a distribution, we did not get a distribution here. Or you could say this is your step 3, but you never break structure back to bearish, so your short never got confirmed. But since we are now in an uptrend, so basically every range that you draw is a bullish range. You should focus on catching accumulations instead of the distributions. The accumulations are much easier to play, and eventually price will always form a range before going up or down. So, and you just need to know where is there no setup for me. So currently, if I look at this, I had this range on BTC and this local range. And sometimes when volatility is high, you can look at the local ranges. So here you had like this local range. And then if you get local accumulations, you can play them. However, this one, simple, tap 2, no structure, not really a trade. So this was nothing to work with. And right now, if I look at this price action, this is also nothing to work with. It's just massive squeeze higher and some sell side liquidity. And now, yeah, this is truly nothing. What I think can happen here is this, and then we can draw a new range, high to low. And then if price spends more time in it, then we gonna look for that range. Then again, this is a bullish range, so be careful with shorting it too early. Most likely is that you get like a tap, then if you break, and then just look for accumulations. And this range, of course, it can be like this. It can also be a range this wide. That all depends on what kind of price action we get. But in essence, price action is just the same. So we still get ranges and we can trade them. And of course, you can always map out what are the demand levels. So if we look at this move up, we currently have like massive impulse, high, higher low, higher high, higher low, higher high. So also this full less leg here, there's no structure in it. So price can easily come back from higher low for a higher high. So into proof and otherwise, this is what where you should mostly eye on. And do not fall for the trap that you think I'm too late, too long, so I'm only gonna look for shorts. Because that is what 90% of the people think. And as long as people are going to short this, it will just squeeze higher. It's just the name of the game. Until people are convinced that it will go higher, and then it reverses. It's literally, the market knows how people think. So all you can do now is wait for local ranges to form, or just map out where is my last market structure level. So in this case, on the hourly, it is like right here. This short market structure low. And then map out, do I have demand or supply nearby? So here I can already see we basically consolidated here and then pushed higher. So this was a bullish range. There was not an accumulation you could play, but if it breaks upwards, a consolidation, then the purpose of this range was to push higher. So this is basically a bullish range, where if you come back, it can act as demand. So they can look on what time frame do we have something. Okay, that's too high, 8 hour, 4 hour. You can already kind of see that there are some demand levels. But is there really clean money? Hourly demand zone, super clean. But basically you can see this also, and I would say this is just demand range. So backtest of that, can you look for longs depending on how price reacts. Preferably you get like a local range, pulling back into that demand, and then if you have like range high, range low, tap into that demand, tap 2, break structure somewhere, then this is like a long trigger. Just trading with the trend, high, high, low, higher, high, high, low, higher, high. And of course, above us, we also have super strong supply. I will go into the high time frame in a minute. So if you are in a high time frame supply PY, then of course, if you form a super clean distribution model, then there it makes sense that you maybe form a distribution. So then you can look for shorts, but you have to be really careful that you are not only looking for shorts right now just because price is pushing higher, because that is what everyone thinks. And market makers also see that, so they will just keep squeezing it higher as long as people are shorting the moves. So first of all, let's go back to the high time frame, because we have our major range, which is basically this super big one, where we made it low after that crazy liquidation event, then had this slow grind up where all the sell side liquidity got created. Eventually price broke structure back to bearish, and then we had this new sell-off, taking out all that sell side liquidity. And from there, basically we started to form accumulative price behavior by sweeping the lows over and over again. And yeah, I don't have to explain this last range because that's where we've been in for the last couple of months. When was that? 5th of June. Yeah, there with the Model 1, so tap 1, tap 2, tap 3, broke structure back to bullish. And this is where we entered this multi-week, I think it was 5 or 6 weeks, where we chopped in a super tight range and traded it pretty well, just from value area high to value area low. Played these local rotations, and eventually price yesterday shot up much higher, breaking out of the range. So now this whole range, because we're breaking out of it, is basically a demand range. So basically this whole range is now acting as demand. So it can be a RIMC. Range. Each range has a purpose, either to break down or break up. Well, this one clearly broke up, so then it's a bullish range. And then this can be in high time frame RIMC. Spend time, higher low, higher high. This is unproven otherwise a likely outcome. So this whole range can be seen as a bullish range. However, the tightest, so we can pull the volume profile from here to the breakout level. Yeah, okay, so basically if we draw the volume profile from this whole range and also the volume profile of this super tight consolidation we had here, they overlap almost exactly the same. You see value area high is the same, point of control is exactly the same, and value area low is a little bit different. But that shows that because we spent so much time here, that all the volume got traded at this level. So this is where the accumulation was happening. So we can now actually just use this bigger supply. And then we know that the highest probability level, in case we get a retrace, which more often than not eventually you get it, is the retest of your range, value area high and point of control. And that is exactly where we yesterday had this breakout from. So here we consolidated, and then boom. So in case we ever get a retrace, the top of the range is your first major PY, but this is like a massive level, 65 till 63k. So if we retest that, that's like a big level. But as you can see, we're in this range for, what is it, 74 days. So you're probably not gonna see this and then a retest coming week. That does not make sense from a time perspective. Often if you have a range like this, then before you retest it, price will also spend like a long time. Right here, maybe range, then retest it. And then you have to see if you get a retest and then go higher. Or in case they want to fully fuck everyone, you could see this like a PO3, Model 1 distribution, and then if you do not react from here, get that last move down and then send. So a lot of opportunities and outcomes on high time frame. And as always, it's not our job to predict what's going to happen. But all we can do right now is to map out that if we get a retest here, this is major level of demand. And on the upside, we have a few levels we can look at. We blasted through the first one, which was like, where was it? I believe 71.5. So yesterday we had it here, and there price just blasted through. So now we have the next big levels right here is here around 74k, and then another big one at 77. And above there we mostly have liquidity. And then a huge level at 88 to 90k. So yeah, all we can do is to see how does price move into that level, and do we get triggers or anything there or not. And And beside that, I'm just interested in playing the local price action. Although at this point, it needs time. I can already see like you can go really low time frame. But what often happens after massive moves like this is that the market is going to reprice, and either you squeeze higher, but then on the low time frame you often still form a range. So oftentimes you can have like a tiny range, like let's say that this is the range, and then that one might reaccumulate by sweeping a low, get a reaction, and then push higher again. And this is where often local ranges flow over into bigger ranges, because this can then be your new range, and then your local range turns into a bigger range, which turns into a bigger range. But if you just keep focusing on the local ranges or the new ranges that get formed, then you can trade it pretty well. You just have to be patient now again and not try to. Okay, let's say that this is the range, then after that you can extend it again. So then this is the range, that is the range, and then you can keep playing it like that. Only thing is that probably now a lot of people will feel FOMO and think, oh shit, I need to compensate for missing out, or for the stupid losses I took yesterday, or everyone is making money, I'm not, so I want it to get in the trade. And that's exactly the trap, where you will lose more money, because eventually it will be obvious. Right here, I literally have no idea what it's going to do. All I can do is map out, we have supply above us, we have demand below us, and if we form a range, then I'm gonna look to trade that range. But beside that, literally, I can better go to the casino and put all my money on red or black than say from here what's going to happen. Yeah, it's more likely that you continue pushing up, so then I would say buy, but yeah, where is your stop loss? At this point, there is no stop loss for me, so what I want to see is form a new range, then trade that range, or move into supply, and then if we get like the usual weakness into supply, a 3 drive, 1, a 2, a 3, break of structure, then this is a short setup. Back into the range or back into demand. In demand I want to see this, but then inversed. So do we get a move into demand with, for example, a 3 drive? Do we then break structure? Then I'm gonna look for 1, 2, 3, break structure, look to play the higher low, and then play it back to supply. And maybe the new big range will be formed between these levels eventually. That could also very well be the case. The price now is going to be stuck between supply and demand. That could very well be the case as well. But then we can look for altcoin setups, for example, because market is now turning a bit bullish. If the best thing you can get right now is that either Bitcoin keeps pushing higher and higher, although it's already pushing quite high, and then you want to see Bitcoin form a range, and then you want to see altcoins take over. That's like the most bullish scenario, that Bitcoin stalls down, forms a range, and altcoins start making big moves. So hopefully we get that, and then we can see some very solid moves. So let's have a quick look. First at the order flow, and then after that at USDT, because USDT is super clean as well. Here. By the way, if anyone has a question, let me know. And also if anyone did take like big losses yesterday or whatever, you can always send me a message. Believe me, I've been there a lot of times in the past, where the market started pumping, I was in a short, I saw it pumping, I started shorting it again, and that's probably the most painful thing there is, if you are shorting the move up and you see it pumping like crazy, because then it seems like everyone is celebrating, you've been on the wrong side, you could not accept the loss and then you get wrecked. So you can always DM me, just make sure that you are DMing the real me. So double check or just look in the Discord and click on my name if I send a message in my own account and then send that one a request. Because most of the there are so many fake accounts going around, and you don't want to start talking to a scammer right now, because then he's gonna scam you of your less money. Let's first of all look at the bigger picture. So let's see if it wants to load. Yeah, okay, there are the levels. So this has been the massive range we've been in. We had all that liquidity resting below. To me, it made sense to take it, but price does not always need to take it. But eventually, there's a reason for price to take it. But now we can see that price started squeezing higher, taking out all these poor highs of that range we've been in for a very, very long time. So all that liquidity got squeezed, and that caused that massive squeeze where 3 billion of shorts got liquidated, which you can also see here with that open interest decrease. These were all the shorts that got wiped out, strong buying, and also massive positive delta, which are market buys. But basically, if a short gets stopped out, then it turns into a market order, a market buy order. So here you see massive positive delta, but that can also be shorts that turn into buy orders and then squeeze and squeeze and squeeze. And that can keep on going till the market finds too much resistance. But right now we have those levels above us, so it could continue squeezing into this resting liquidity above, where we yesterday blasted right through this resting daily point of control, where we basically are now sitting above. And from here, there's not much between beside these poor highs, and here we have two stacked naked daily point of controls, one at 75.8 and one at 76.6, which are big levels. And here, what did price left behind? Multiple single prints, so fair value gaps, as you can see, which is basically bullish because it are bullish fair value gaps. So if you test them, oftentimes you react bullishly from them. But sooner or later, price wants to fill that. So it doesn't have to happen right away. Can take a week, can take a month, can take multiple months. But eventually, the market wants to take that and fill it. And below us, we have a big one. Like here you see the tiny ones, but we have a big one created today, basically, which aligns with that demand zone we mapped out. So we had that local range right here, not really a clean entry trigger, and then push higher. But we have that big single print below it and a daily point of control. So if we retest this is where longs make sense, or at least we can look for bounces and stuff like that, which is in line with what I just explained. With all we can do right now is just look at demand zones, market structure, and supply zones. So that's that. And locally, what are we doing? Yeah, CVDs are still pushing higher, so spot is also getting involved, and open interest is just squeezing lower and lower, basically wiping out a lot of positions. Let's look at the chat. Baron is the only one allowed to share P&Ls to the... Yeah, I think he made, like, those guys that were at that conference, they made a lot of money. Like, it's crazy. BTC to the moon and beyond. How did your long go good without way too early? Yeah. Like, but that's the case with these kind of moves. You can, like, a lot of people have been liquidated. Other people were short, got stopped out. Other people missed out all the moves. Then you have people, like, basically, I think everyone is kind of feeling missed out. Because even if you were long, most people started scaling out here at the range high, or here, or here, or here. And they also feel bad right now because they think, oh, if I held it till here, I would have made 3 times or 4 times the amount I did make right now. So there's maybe only like 0.1% of people that bought here had a good position and are still in. Most people are thinking, oh shit, I should have done better. And it's really important to not let those thoughts get too much into your head, otherwise it will fuck you. And it's really hard to ignore it, but it's the truth. Okay, so that's that. Then also, because volatility is back, I like to put those indicators on. So the VWAP, daily VWAP, basically if you are above VWAP, it acts as support, especially on the first taps or second taps. So let's say we have a range high, range low, and we make tap 1 here, come back to the range, so we have our local range high, local range low, and then go back for like tap 2, and it aligns with your daily VWAP, which is untested, and then get a bullish reaction from that. These are like pretty solid scalp trades you can take if you get the confluences, because you are simply trending up. So a local sweep into your VWAP, these are trades you can take, but as I already said, if you are not into scalping or so, be very careful to not all out of a sudden now think that you have to compensate, so you go to the low time frame to start scalping. Eventually it will become obvious again. And either Bitcoin now doesn't let anyone in, so it gives like slow pullback and then continues higher, or typical Bitcoin to form a new range and just chop everyone up for a week and then make like the next big move, because now everyone wants to compensate. So what's most painful right now? Either massive acceleration once again, or just chopping around for a long time. Okay, so let's look at USDT, because that chart is wild. And first, let's see the chat. Still though, you got in for it, at least a bit of a ride. I've got spot backs like you, Kijo. So true. Cheaper like you gold, but still you got to ride some of the wave. I also still feel bad about gold. I feel bad, the worst about gold, that I've missed those textbook accumulations. Okay, let's zoom out on USDT. Question from Daniel, also weak BTC London high today. Let's look at that. I will go over it in a minute, but like these are the ranges. This is super clean. The range is being formed. They will be everywhere eventually. Let's see. Do we have? Oh yeah. Yeah, we have a massive squeeze. So this is our daily. Yeah. Where's our daily low? Yeah, this is our daily low. So basically at Asia consolidation, London expansion, and we indeed have a very unlikely daily high at London right now. So this daily low is super strong. Okay, we will dive into the stats first. This low is during Asia, and now, like yesterday I said, I'm not looking at the stats too much because we are too choppy. But this is where stats are super handy, because now we have a strong Asia low, and we moved far away from it. So timing will tell us that this is a very good low, that this is a very weak high. But distance will now also show that the chance that you make this kind of a move and get a full retrace back to this low is probably a few percent, very, very unlikely. So then we can combine that and make the case that this low is unlikely to be taken out, that high is likely to be taken out, and then we can make the case that if we get like some sort of a retrace towards, let's say 50%, that longs from here make a lot of sense. Simply because we know that this high is super likely to be taken out and this low not. So then we can make some cases like, do we have a range? Do we have supply or demand? Do we have anything where we can find some sort of setup where we know that this low is super solid, that high is super weak, and then we can make a trading plans on that. And of course, in an ideal world, you get as close to the daily low as possible. So then we can pull VIPs, VIP right there, yeah, and then like you don't know, volatility is high, so but I don't really expect this big of a move. But let's say you get this, you retrace into your demand, into your VIP levels, really close to a super strong low, your daily high remains, then these are setups you like. This is amazing, these kind of setups, and it's too early to say for now that we are in easy mode, because it's only been a day that we've made the crazy moves. But eventually you will get easy mode, and then the market will provide you with this kind of setups, and then we gotta extract as much of it as possible, because we have seen that the market is not always easy mode. But if it's easy mode, we have to make the best of it. So let's have a look at the stats. Let me write the data. Yeah, it's a deep pool. I don't expect it to happen, but if volatility is big, the moves up and down are big as well. Okay, let's see. This is the daily candle. Well, that's obviously, yeah, okay. So we're making such a big move that the stats, we are way out of the normal bands. So it doesn't really tell us a lot. What it shows us at least is 83% of the days put the high in later. So based on timing, it shows us that the high is likely to be taken out. But based on the distance that we moved, so from the daily low to the daily high, we can see that only 6% of the days put the high in further above the open. So we are like in a super bullish move already. So doesn't tell too much. How do you get the classic BD dashboard? Yeah, let's see. If I go here, I have it right here. So it's like the normal, I don't know. Here by the data that comes with its time. Here you can see like the old one. So let's see for today on BTC. This is the daily. Yeah, 27% moved further. 90, like here, this shows our current daily high is at London high, at 10.15. 95% of the days form a new P2 after that time. So based on timing, very big chance that we make a new high after that. Okay, let's see. Kijo, one thing I love about this current ETH high since I've got OCD for inefficiencies. Is the current ETH high perfectly rejected by clearing a daily unfinished candle. Cool, yeah, that's very clean. Let's have a look at USDT, because on the high time frame. So we had this, like now it looks like this was some 1 minute chop, but this is where we've been in for months. This was that local bullish 1, 2, 3, that 3 drive, and then this is that chop of since like the last month, from July to August, this massive chop, and now bam, broke down. So if we zoom out, we are actually back into this big range. And this is like the massive range. Like I also kind of have OCD when it comes to charts. Okay, I want to get rid of that. But we basically have massive range, which is this one. There. Clean one. I'm gonna lock it so we don't move it. Yeah, so lock it. This is our initial range high, which never got taken out. We were close by it, but we did not tap it. And this is, I remember this one from, that was like 2024, where we had our tap 1, our tap 2, and then here, look, price swept, extreme liquidity, aka model 2 liquidity taken, model 2 accumulation, boom, and then here price came back for a mitigation of this 3-day demand. So you can basically see like a model 2, an extended model 2, where this is your fourth tap basically, right there. So here price is in this massive range, then came back down, formed like a 1, 2, 3, 4 accumulation model, broke that one to bullish right here, and since then we entered this range we've been in for the past months. So we have massive range right here. This was in discount, now we are distributing in premium. Super clean high time frame range behavior. And if we zoom in right here, this was our last range, where here we again accumulated. So tap 1, tap 2, tap 3. This basically your test, so your fourth tap, and then we started grinding up full send into the range highs, where price basically from an accumulation directly went over into a distribution. So here we took out that high, tap 2, made a new high, tap 3, model 1, distribution, and then internally broke structure back to bearish right here. Bearish break, and there we started this mega chop, where we've now broken down from. So my main expectation here is that we are on our way, unproven otherwise, and basically this whole breakdown is supply right now, range supply, with refined supply right there, but that we are on our way to complete this model 1 towards the range low, right here. Right here we only have liquidity, we are already breaking down from that local demand. So we have to see how fast this goes, maybe it goes in one go, but we could also range here, tap, and then go down. That all depends on what we locally get. But overall I expect price to move eventually towards this range low, and that is where we have massive demand. So that is the level where it's going to be interesting what price is going to do, because this is the last consolidation, range, boom, breakout. So eventually price can come back to test this, and then it's going to be the question, are we going to continue for a retest and continue higher, or do we break down? And then it's funny because it's ranges into ranges into ranges, where we talked about yesterday, but this is at the mid-range of our overall range. So if you want to have a masterclass on ranges, USDT is the one for that. But very quickly, unproven otherwise, I expect like maybe retest it, we go either straight down into the level, or we retest it and then go there. But overall I expect this level to be tested, And there it's going to be really key to see, is price going to maybe reaccumulate here at the mid-range retest and then go back to the highs. This will be like max pain. Or was this the high already and then we go back to the main? Like if we lose this demand, then high time frame range low is back. And then we are back into full bull run vibes. What would have been, in my opinion, cleaner is if we did take that high. But yeah, obviously it does not need to. But we were so close, like take that high out and then it was super clean. But overall on the high time frame, really clean levels. I like how it looks. So that's that. I have some alerts here in case of backtest. But basically we had this as demand, like the only real strong demand, and price is slicing through it. So from here, from range low till that demand is mostly liquidity, so nothing really strong to hold price up. So I have to see what happens here, but yeah, so far this looks heavy. But I have to see, do we form a range, get redistribution, then that's a clean confluence for continuation lower, or yeah, there's just too much that can happen right here. So I don't really have like a super good bias. We can also form range, and that this is the new range, and that we spend the time there. Just, I don't know. It's not up to me to predict what's going to happen. Better to let the market show its hand and then play it from there. But overall, high time frame looks clean. Yeah, as Mike is saying, too bad we didn't take out that high. I'm looking at the daily demand aligning with monthly, make it part of control. 786 in POC of the range. Daily demand. I never really used the volume profiles. Yeah, that's probably this level. Is it also the 786? It looks like it. Yeah. Yeah, that's like the last. That is quite a significant level, yeah. Alert there. Let's see. Like if price holds right here, maybe we can ping pong between this massive supply and this demand, and form a range, and then that range will tell us up or down. Okay. Before this stream will be too long, I can, like after what happened yesterday, I can stream for 3-4 hours, but I'm not gonna do that because I also have to dive into the charts myself, and or like the charts. Probably my cousin needs to help her and make fun with her. So probably no trading, but I'm gonna look at it. However, I wanted to first of all explain at the start like how to trade this. But overall, it's just look at your demand levels, PY levels, ranges, and don't start doing stupid shit in the meantime. But I want to go over the main pairs and the high time frame levels. I already shared them in the group, but I really like how high time frame looks. Like ETH, it looked like shit, but and still, if I look back at this price action, to me this is not accumulative at all. It turned out to be an accumulation because we broke upwards from the range, so we consolidated, and then pushed higher. So this is a bullish range, but if I look back at it, it still looks distributive as fuck to me. We took the highs, we did not take the lows, we formed liquidity. So typical ETH price action. But it's telling us that we blamed it enough. However, similar as Bitcoin, if we reach, this is like massive demand zone because we spent so much time here. We broke upwards, so if we retest it, this is a massive level of demand. And other than that, we don't have like this a lot of liquidity. There's not really super strong supply. This is mostly liquidity, so like 2500, yeah, there's not much in between there. However, if you look at like this candle is crazy, it's one big imbalance. So also here, just gonna look. The only thing you can really do here, because we have mostly sell-side liquidity above us, massive gaps below us, and then massive demand below, is to just draw a local range and see if you can play that. And see, did we have demand? What are the levels? But as you can see, it's mostly, like here, this is some demand. But beside that, it's probably gonna try to reprice and see what the new value is. And so far you have range high, range low, so range high, range low. And right now price is spending quite a lot of time within it. So this can be a range to play. But also here, don't forget that this is a bullish range until proven otherwise. So be careful directly shorting the first high right here, because technically we are in uptrend and this is a bullish range. So chances that this is just range before continuing higher are much bigger than that this is the topping range and we reverse. So main attention is to look for a range sweep of the low and then continue back up. And for distributions it has to be super clean. And especially here right now 90%, 95% of the people are only going to look for shorts, but that is acting as well, because everyone is starting to short this and price stalls here, and all those shorts add up and price can use those shorts again as well, and then it just pushes higher. So be careful with only looking for shorts. But yeah, a lot of big inefficiency, so can be pretty hard to trade. Let's look at the chat quickly. Noted, not doing stupid shit. Yeah, trading is not too hard as long as you don't do stupid shit. TD eat 5k soon. Yeah, it's like double of the price. Eventually, I think we will get there, but yeah, we should not be too soon with talking about those crazy numbers yet. Tom Lee was the only one accumulating. Yeah, eventually it is probably going to do, but yeah. All disabled, but now we have a best over. Let me know that the driver is. I also need to see. Okay, so Sol. I like Sol, like ETH. Basically, this demand is super clean, and then this liquidity point is clean, but in between, it's a lot of nothing. And this supply right here is also super clean, but especially a lot of nothing in between those levels. But on Sol, we have like this range low, range high, sweep, back in the range. And here, unfortunately, only a 2-tap model and not the model 2 for the long. But now we pushed higher. So basically here, this whole range is now also demand range. With this being like the refined demand, which is the start of that impulse. But basically this whole zone is now demand, because this was range, break upwards, test it, and then if you get the confirmation, you can long it. But also just above, we have a lot of supply and a lot of refined supply levels. So also here we can look for longs, here we can look for shorts, and that's what I like, to just have multiple PY levels. Like, is this a range? Too impulsive for now, so I'm not treating it too much like a range yet, because it looks more a bit still like high, higher, low, higher, high, higher, low, higher, high. So this could be higher, low, higher, high, and maybe that range is then more obvious. But yeah, you can always just draw it in to see how it plays out. But right here we have a lot of supply levels aligning. So then if we get a move into that with a 3 drive or anything, it can be a short. And then just see where price comes back. Maybe it stalls there. And then that is the new range. And we pull our range from high to low. And then we can look to play this range. Then maybe we distribute it again. That's often what you see. You first have like local 3 drive in supply, come back down, form range high, range low, and then take out that high again. And that is then potentially the formation of your distribution. Or of course you take the lows and then you just long it, because high time frame is pointing upwards. So Sol, I really like it. At least a lot more than ETH, because ETH has a lot of nothing on both sides. While this one has clean levels to look at. Also here, this is like local consolidation, so this is the top of your demand range, lower one. So a lot of levels we can look for triggers. That's basically what you want. Hype, yeah, crazy move. This is on its way to all-time highs, in my opinion. But also here, like, this candle is just insane. So other than marking out some local levels, yeah, you need to be careful with trading it. On the downside, this imbalance is crazy. And I think this is repricing, because that news that they are going to be allowed in the US, that's massive. That's like hype. They already do massive buybacks, and the more liquidity, the more volume they have, the more the buybacks will be. The higher hype price goes. But if they are allowed in the US, then that whole mechanism behind it will, yeah, there will be so much more money going into the project, so much more liquidity, therefore much more revenue, therefore much more buybacks, that before this news, like right here, price was at all-time high, but that was without US economy behind it. Right now, you can see this is repricing of people that are gonna see, okay, if the US will be allowed, then the revenue will be this, buybacks will be that. So then it's just a new mechanism to calculate the worth of hype. So I think this is on its way to all-time highs. Man, I doubt we get these entries. However, it can always happen, because the last time we also had like crazy aggressive move down, then price came back for that 0.618 level, as I believe, and then we bounced from it. So maybe we can top out a bit, get back, and then move higher. Like this is what I would absolutely love. Just not sure we will get it, but eventually it will be clean. Just don't try to chase it too much in between. Then last one, Tao. Still like Tao on the high time frame. I think one of the best, by far the best looking charts. This is just screaming to break out eventually. I think for spot anywhere between here and here, it's all very good on the long term. Just locally, yeah, here we have demand left behind, so retest of that demand, super clean. We just took out the high, and this morning I was actually looking at this range. Let's delete that. Range high, range low, and I was at 5, and there I saw like, okay, with the one we took out the lows, and what can always help is to put on your deviation threshold, and they can clearly see you are in your deviation threshold. You come back up, moved up. The only downside is that we never broke structure in this leg back to bullish, but I saw that we were moving up right here on the 5, so high, higher low, higher high, higher low, higher high. So I saw it, okay, we have a bullish range, we have tap 2, we are in a bullish market, so where is my model 2 POI? And we had, like here, 5 minute demand, where I had my alert at. So tap 1, tap 2, and this was like extreme demand, but also extreme liquidity, because it's our first obvious higher low before higher. So price swept extreme liquidity, basically broke 5 minute demand, but it's not too bad. And then it broke on the low time. Where did it broke structure? Yeah, so on the 2 minute it broke structure right here. And that's basically your entry confirmation to play the model 2. So this is a perfect example of if the market is volatile, you will see this often and over and over again. Where with tap 1, you have tap 2, come back in the range, and then you can watch, do you get a third tap right here. And then when at the moment I was looking at the screen, price was right here. So yeah, this is too late. It's simply not, and of course price can rally much higher, so it can be worth it to enter, but it's important to not throw out all of your trading rules out of the window. You basically still want to enter in discount. The lower in discount, the better, but yeah, you should not start longing premium just because you want to get in. So if you see this, I still think, okay, I'm too late, it is what it is. For the same case, price came back, pushed higher, left this demand behind, came back into that demand, broke structure internally back, and then you have a clean long. Then it's long, stop loss, target, there, preferably even lower, but these are the setups where on the low time frame you can focus on, which are super clean. Other than that, my read on it right now is not super clean. Here we left some demand behind. But yeah, I have to dive a bit deeper into it, but not really seeing anything. The other ones I already shared, yeah, like Dodge, it did not give the entry, but the good thing, last one before I will stop, with these kind of setups, yeah, okay, this one is already squeezing like crazy. So it's almost at the high of this PO3. So that's a bit unfortunate, but oftentimes, like for Dodge and XRP, basically the target is the range high. So like here, I knew this was an accumulation, I just did not want to get in, use a wide stop loss, which I'm now kind of paying the price for. But as long as your target is not hit, which is your range high, you can look to play the local ranges. In this case, unfortunately, price never swept the local range low. But like here, let's say this one took out the low, then you have tap 1, tap 2, and then if you break structure, you can basically long it. Because price is intended to go to your target, which is at the range high. So then any local any range you internally get is probably going to be a reaccumulation, because your objective is higher. So then you can try to get in those positions, and then oftentimes you can still get a better RR setup than the early entry. However, in this case, it never gave the sweep. Yeah, all the charts I already shared, I will not go over them right now. But I think things are clear. We finally have volatility, which means that it's going to be a bit wilder than before. But in the end, still map out your supply levels, map out your demand levels, map out your market structure. Don't fight the trend, which is what most people will do. And above all, wait for the ranges. Eventually the clean ranges will be formed. and those are the ones you want to play, and not be in a situation right here where you think, oh, should I long or should I short? I want to go long, so I'm now going to long, and I use this less low as my stop loss, because if we go up, then I make money. Yeah, that's waiting to get wrecked, and then chop, and then eventually you look back and think, hey, this was an accumulation. Why did I not play that? But that's because you became emotional, because you started breaking your rules and started to trade on emotions instead of a system. So that is all I wanted to say basically. I hope it's a bit clear. Well, I hope especially is that we can make some money, but above all, make sure to not lose money. There's no need to chase right now. Just make sure to be in the game, because we are about to have super solid months ahead and years with easy money to be grabbed up. You just need to make sure that you are in the game when it's there. What we see right now is not easy money at all. Yeah, if you bought spot or leveraged or like swing longs, then this is easy money. But trading wise, it will get much easier, believe me. So thanks everyone. Good to hear you guys like the stream again, so far as I can see. And yeah, I will have fun with my niece. Maybe some trading if I can map out some levels. But as I see it right now, yeah, just gonna wait, put some alerts, and then see. And there are also more important things than trading. So I'm gonna enjoy that. And tomorrow I'm definitely back. Probably earlier with some updates if there's something to share as well. But yeah, see you guys. Thanks for watching. Thanks for tuning in again. And happy clicking as always. And I'll speak to you